Good morning. Good morning, 350 great people here and thousands, if not tens of thousands, watching us on Delphi. We choose to go to the moon, not because it's easy. We choose to go to the moon because it's hard. Because that goal serves to organize and measure our best skills and energies. Now, I'm not crazy. This is JFK in one of his speeches in 1962. For me, it's one of the few examples of how a top-down political ambition really managed to unite people and ended up as a success, by the way. They went to the moon, after all. When I asked my students, I give lectures in a few universities, give me an example of such a thing, a top-down political ambition that ended up as a success. And one guy said, North Korea. And then I said, wait, success. And then it was quiet. I have a slide for you. This is the capital markets health in Europe. The most recent one I got. I've circled our countries here. We all know the reasons why we are on the right side of this diagram. We are still probably the most bank lending region in Europe. But just to remind that it's now 15 years that we had a major crisis which came from banking. And our countries were hit the most in all Europe. I would argue that one of the reasons was that we were that bank lending based and we didn't have a strong capital markets to soften the blow. Now the question is, have we learned something? Have we learned anything from this? I'd like to hope yes. When looking at this graph is made up of several metrics, but the most important one, you all know what it is. It's market cap to GDP. It's the listed shares. It's of course also private equity and other metrics, but it's the listed shares. Now, for me, it's very simple. How do we move closer to the European average that is set to 100? This is not market cap GDP here, this is just a comparison where Europe is 100. One way, of course, would be to increase the number of companies that have a sizable market cap. The other, we were joking yesterday evening that we could have a lower GDP and then we would immediately move towards the average, but I don't think we want to do this really. Having said that, simple is not easy. So we know what we have to do, but it's very difficult to actually accomplish. And when we have a goal, and I think we all have the same goal, to build our capital markets, but having this goal without a plan is just a wish. Therefore, we need to have a plan and we need to have a strategy. When we think of Estonia, Latvia, Lithuania, some do have a strategy. I'm actually positively envious of your ministry. I think we could all learn from this. Not to sound overly pessimistic already in the beginning, I'm pretty sure, actually I'm really sure, that our market, our capital markets, is more mature than ever before. Our investor culture is better than ever. We have more companies than ever. Our market cap is higher than ever. But still, I think we should aim at a higher ambition. We have great keynotes today. We have deep dive case studies. We have great panels about IPOs, about state-owned enterprises, about bonds, about investing, you name it. If you watched this or you were present here last year, I can assure you this will be even better. And with that, it's a great pleasure and honor to introduce our first speaker, who, when he was a prime minister, not only was exceptional in governance, but what I hear played a really instrumental role in Latvian financial system and capital markets development. Now, Minister of Foreign Affairs, Krišjānis Kariņš.
Thank you very much. The music, I'm not supposed to dance, I hope. You don't want to see that. Thank you very much. I think it was a great introduction, and there's really not so much more to say. When you're developing your business, you need capital, and there are two ways to get that: to borrow the money or to get equity. Borrowing money means going to banks. That's where we are today. Going to equity means going to the capital markets. That's the direction that we are heading. In my previous two postings as running the previous two governments ago in Latvia, I spoke with my partners at the time in government that we have a lot of low-hanging fruit in our country to help develop the capital markets. These are all of the state-owned enterprises. And I floated the idea together with my finance minister, that we should look at our state-owned companies, look at the ones which would be most suited to introducing to the stock exchange. You don't have to sell the entire company, sell 5, 10, 15, 20%. That means an opportunity for individual investors to come in. It means an opportunity for pension funds in Latvia to invest in Latvia, not going to the capital markets and investing in Sweden or Germany or Spain or Portugal. And at the time, my partner said, no, we're not going to let these companies out of our political hands. This is a no-go. For 4 years, I tried to work around that. After the last election 1 year ago, formed a new government where, once again, this was one of the basic tenets of what we wanted to do. And the new partners said, actually, they were afraid, but they were no longer 100% against. We formed yet a new government. Now I'm the foreign minister, and the new prime minister has also gotten into this government's declaration. And I just spoke with my finance minister, my colleague, yesterday. He's out of the country today, otherwise he'd be here as well. This is clearly in the government's declaration. And the goal is, again, quite simple. It's the same goal that I had 5 years ago. But I'm convinced that now we'll be able to move forward because the political resistance has gone. That in order to stimulate, and it's a question of stimulating, we have, shall we say, the entire structure is in very good order, but there's these companies that we have, if we could get them to market, it would really increase the interest of investors and open up liquidity in the capital markets. Also showing the way for not the huge companies, but the smaller privately held companies also to head in this direction. So we can stay where we are today, that is going to the banks for money, and go with the slow growth models. Or we can put aside our fear and put aside our political will to control, to let the damn thing go, and go into the future, which is a little uncertain. And I can say a few things about letting go. I was the Prime Minister, and I decided, without being forced either by the voters or even my own party, thankfully, to say, if we're going to change the government, then let's go for a change of the leader of the government, to get new ideas in, to get a different kind of energy. And I stepped back, and today, it's a few weeks later, I can say I actually feel wonderful about that decision, because what I had hoped would happen is happening. New people are coming up. They're coming with a different approach, a different kind of energy, and I'm happy. I'm just completely tickled pink that I'm still able to be part of all of that. But the topic to today and the development of the capital markets in Latvia and in the Baltics. Estonia is the most advanced of the three of us, but we saw in that graph that compared to the broader context, we have a long ways to go. All three Baltic countries were all extremely closely interrelated. And it's not the case that if one does well, good for them, and you want to climb on your neighbor's shoulders. If we're not all doing well, then we're not all doing well. And we each has to play our part. Our companies are intertwined, our businesses are intertwined, and of course, as it will develop, our capital markets will become ever more intertwined as well. And this, I think, is a good thing. So my message is, let's put away our fear, and I'm speaking as a politician, our political fear of change. Let's embrace that change, let's do it right, and let's unleash the potential of Baltic enterprises. We have, and some companies are already starting, we have gone the gamut of needing all the capital to come in, expertise to come in. We are now ready to go out, and we can do that. The Baltic countries are well poised to start to more actively export also their businesses, to start to look to acquire businesses from the outside, not being bought from the outside, but buying those businesses to shall we say, go on the offensive. And the development of the capital markets will underpin that. And that will help us politicians as well, because that will raise the standard of living. And believe me, if the standard of living goes up, it will be the politicians who said, see what we did. We won't say it's the businesses that actually did all of that. But it's the working of the politics and business together which makes any country tick. So from my point of view as now the foreign minister, I'll be the #1 cheerleader behind this, also working in the government and working internationally. Let's work together. Thank you very much.
That's what I was talking about. Top-down political ambition. And with such people, I have no doubt that we have a very rosy future ahead of us. Before we go to the next speaker, one brief reminder. Please engage, ask questions. We have a system for this. It's called Menti.com. You can either scan the QR code here or just use the code. I will see the questions. The panel moderators will see the questions. And just let's have a very lively discussion around these very interesting topics. And without further ado, next speaker is Deputy Governor of Bank of Latvia, Santa Burgaile. Please, the floor is yours.
Good morning. I'm so glad to see this community who cares about the Baltic capital markets. It's been already a couple of years we are coming together discussing this very important topic, and we also as the central bank really feel as a part of this community. So definitely the capital markets is the backbone of our economy. However, it's sort of, we are still struggling to really get our capital markets like blood flowing into the economy. So there are extremely a lot of challenges all the time coming into our agenda. We've gone through different periods like COVID. Now we face the Russia's aggression in Ukraine. We have now the fighting inflation with the higher interest rates. So we need to adapt all the time. We need to think ahead of time, and adaptability will be the key to success. We've been working for our 10-step program, which we as a central bank, formerly actually Commission of Financial Capital Markets, have introduced. And actually we are following step by step, and we are reporting also to you how successful we are. And actually what we see that despite the growth is still sluggish, but the growth is happening. And actually this is very, very important that at least we can see some positive changes, some positive impacts we are making. Definitely we see that the Baltic cooperation is also very important as a key to success. We need to unify our markets, our documentation, the way how our entrepreneurs, potential emittents can enter the market. And actually we have done a lot. We have already unified almost all documents needed for the public offering. So we are working very, very closely with our colleagues in Lithuania and Estonia to really have one Baltic market. Also, I think very important breakthrough what we did and what's actually happening as we speak, we have introduced the security sandbox. And what we see that this is very important tool now, how we encourage our potential emittents to come and meet different experts. And thanks to all our colleagues who supported us to have this security sandbox. And what we see, the potential emittents going through the process of evaluation comes out with the very clear, kind of paper and assessment. Actually, are they ready? What should they still do to get ready for capital markets? And what we see that the companies now already kind of experiencing this process, getting towards and are preparing and going towards the capital market. Also, I think very, very important challenge, and not the challenge, it's also opportunity, what we are facing, and also what investors are demanding is the sustainability and approach towards ESG. I think we as the community who cares about the investments, we need to take the charge and direct the capital towards not just the companies who can produce the return, but also companies who will make our society and planet better. This is sustainability, the financial system going into the sustainable finance. It's not like something just, something new and modern, but this is something to stay here. This is the paradigm shift, how we invest, how we approach investments. So also I think this will change how we look into the capital markets as well. Of course, this comes with some kind of new challenges also for capital market players, because there are new reportings needed. The European institutions require disclosures, but actually this encourages us to analyze, to assess how we invest, where we invest, and do we care about sustainability. So I think it is important that we are having those discussions, and I think this is important that we do have now the government which is up and ready to also help us. I'm quite a believer that with the declaration government has now, we will see the first steps already quite soon, because we see that there is already assessment happening, and I think this is very, very important, that we will see those state-owned companies or municipality-owned companies to come to the capital market and start already, building up the markets, introducing also other investors to our capital markets. So with that, thank you very much again for coming here, discussing this very, very important topic. And we as a central bank, also as a regulator now, we are here to help for those who wants to invest, for those who are ready to go public, and of course for you who makes that to happen. Thank you.
There were a few questions already. One was, when do we see the first Latvian state-owned company listed? I don't know. Better sooner than later would be a good answer. What I'm pretty sure is that I was just talking to the minister that once the first company is listed, then the next ones will follow. Let's hope it works like this. By the way, did you know that this conference was awarded last year as one of our stock exchange highlights of the year? It's really exceptionally well organized, and let's give a really big round of applause to the organizers and supporters of this great conference. And now it's my pleasure to invite the main guy, Roberts, to the stage.
Thank you, Karl, for such a great introduction. Yes, thank you everybody for coming to this event. Last year we had the first event, and we were really pleased to see that the attention it was getting, and the fact that many industry professionals, issuers, potential issuers participated in the last year event. And it's even more pleasant to see that this year event has gathered even more people around this room. Business community, investment banks, lawyers, accountants, auditors, advisors have been fairly busy in the last 12 months since the last conference arranging capital market transactions. There have been a number of issues generating substantial demand, and tens and even of hundreds of millions of euros. And that proves the huge potential which Baltic capital markets have. And it's job of the industry professionals, of the business community, to unleash this potential and to help investors and issuers be more effective, to raise capital, to invest capital, and to make the Baltic capital markets more active and more efficient, and to help economies to grow, because our economies will be growing much faster if we have a much better operating capital markets. On behalf of the business community, I would like to thank all the stakeholders. I think here in Latvia we have really unprecedented support for the cause of developing of the capital markets over the course of last 2 or 3 years. I would like to personally thank Mr. Kariņš because it's under his leadership this cause have gained the momentum, and we as a business community are really happy to have the support from the government, from Minister of Finance, from the regulators, and it's really our job to transform this support and this infrastructure which was created in the Baltic countries into more active capital markets. Utilizing this opportunity, I would also like to wish APF Holding, the company which is launching IPO tomorrow. It's going to be the first IPO in Latvia during this year. Hopefully it's going to be successful. And I would like also to wish everybody to have a very productive event. Let's network, let's create new ideas, and let's move capital markets in the Baltics to the further development. Thank you.
Now, for the next speaker. The next speaker is from quite far away, from Iceland, and Magnus Harðarson, my good colleague, head of Nasdaq Iceland. Please come to the stage and give your presentation. I think we can all learn from what a small country can do.
Sorry. Good morning. It's a pleasure to be in this distinguished company. Now, the Baltic and Icelandic stock markets share an important characteristic. These are small markets vying for the attention of investors in competition with much larger and more established markets. So every now and then, the question has come up, at least in Iceland, about the relevance of these local markets. Why do we need them? Why don't our domestic companies just list somewhere else? Wouldn't that make more sense? And my answer to that question is that not only are our local markets relevant, but that it is imperative that they flourish. Foreign markets, no matter how large or developed, are not a good substitute for a vibrant local market. And in Iceland, for instance, the market has put value to our companies, even companies that can and have in some cases listed on larger foreign markets. Now let me start by setting the scene and tell you briefly about the development of the Icelandic market after the financial collapse of 2008. It's a story of measured rebuilding and growth, and despite the current difficult market conditions, I've never been more optimistic about its prospects. The Icelandic market hit bottom in 2010, following the shakeout of the financial crisis. And at that time, we had 11 listed companies. But now, the number has reached 30. And market capitalization has similarly grown and is now at a respectable level compared to the size of our economy. It's about between 60 and 70% of our GDP, the market cap. And trading has grown even faster. Now, the rebuilding of the market started with the listings of mature, established companies, leaders in various service industries in Iceland, real estate, insurance, retail, dividend-paying companies. But lately, we've seen more growth companies lists and more dual listings, as I will discuss further a little later. Now, on the investor side, our pension funds were crucial in the early stages of the rebuilding process, because other investors, such as mutual funds and private investors, were weak after the financial collapse. Now, pension funds are still easily the most important investors in the Icelandic market, but now they have been joined by mutual funds, a fair number of private investment companies, and most recently, foreign index funds, and a lot more retail investors. Now, the classification of the Icelandic market by FTSE and MSCI in recent years, and the inclusion of our shares in their indexes, was an important development, and especially the upgrade last year by FTSE of the Icelandic market to secondary emerging status, because this led to new foreign investors entering the market, mostly passive ones, mostly the index funds. However, as you saw in the previous slide, the ownership share of foreign investors in Iceland is still relatively low, between 12 and 13%. This is about 1/3 or 1/4 of what we see in the other Nordic countries. Now, during COVID, there was a surge in the participation of retail investors in Iceland. At that time, Icelandic households held record bank deposits at close to 0 interest rates. So there were economic incentives to find other uses for all those bank deposits. And with retail investors being more interested, relatively more interested, in smaller growth companies, this has made listings of growth companies in Iceland more viable. And retail investors have stayed in the market. However, here there is still a lot of room to grow. We are nowhere near historical highs. And referring to Sweden, as I sometimes do, as a nice reference, as a good example, retail participation in Iceland is only about 1/3 of the participation rate in Sweden. Now, along the way, the government has also taken some actions that have supported the development of the market, such as selling a majority stake in the bank Íslandsbanki. It also introduced modest retail tax incentives and increased the prospectus exemption threshold to the maximum allowed by European regulations, which makes it easier for SMEs to raise funds. However, I would say there are various actions that the government in Iceland could take that would hugely benefit further development of the market. Perhaps most importantly, actions that would further increase retail participation in the market. For instance, more generous tax incentives. So we have come a long way, but I truly believe that we still have the opportunity in Iceland to about double the size of the market on all measures, be it the number of listed companies, the size of the market relative to GDP, and trading volumes. And I base this optimism on the fact that there are so obvious opportunities in increasing the participation of both foreign investors and retail investors in the market, and also that there are large untapped listing opportunities, including sizable companies in important industries. And if we benchmark with the other Nasdaq Nordic exchanges that also support this belief of further growth, because they are about twice the size of the Icelandic market relative to the sizes of their respective economies. And I believe that we in convergence there with the other Nordic markets. Now, I will not deny that working to rebuild and grow the Icelandic market has required patience, especially in the early stages. And therefore, it isn't perhaps surprising that along the way some people lost faith. And I remember in particular having a conversation about 6 or 7 years ago with an important market participant in Iceland who really saw little point in having a local market. And he suggested or proposed the idea or asked whether we couldn't just transfer all the shares in the Icelandic market over to the Nasdaq market in Stockholm. Now, he told me a few months ago that he had changed his opinion. He saw the Icelandic market as being pretty robust, that he was optimistic about its prospects. But if we take a look at this idea of his, now, I must say, I like the Stockholm market a lot. And we certainly want to duplicate its success in Iceland. It is our North Star, so to speak, and I discuss it in glowing terms with Icelandic stakeholders all the time. And it can be a fine venue for dual listings of some Icelandic companies. But it cannot replace the local market. It is crucial to build a vibrant local market to unlock value in our companies and in our home economies. The fact is that the largest companies in Iceland and in the Baltics can, of course, list on larger foreign exchanges. But if they limit their listing to those foreign markets and decide not to list at home, it invites the risk of two adverse effects, in my opinion. One that relates to the companies themselves, and another that relates more broadly to their home economies. Now, first, by listing only abroad, they risk foregoing the attention and the money of their potentially most interested and loyal investors, their fellow countrymen. And secondly, when the largest companies do not list at home, it can have a negative effect on small and medium-sized companies, which cannot so easily list abroad and rely on these larger companies to attract investors to the home market. And this then undermines the local market and, by extension, deprives investors earlier in the financing chain of exit possibilities later onto the local stock market. And this, in turn, of course, diminishes incentives to finance early-stage growth companies, which in turn harms growth. So this is no small matter. And now, I would say, with MSCI's decision to view the Baltic markets, the Baltics as one market rather than three separate markets, I see a particularly large opportunity for the Baltics here in the listings of large companies. Certainly, it is a realistic target for the Baltics to be promoted to an emerging classification. The opportunity here is particularly big. But let's start with the opportunities that the companies could be foregoing in their home markets, their self-interest. And my best illustration in this respect is what I know best, that the Icelandic companies or companies with ties to Iceland that have dual listed abroad and in Iceland. And it should be said that these companies have of course had good reasons to list abroad in the first place. They have sought expertise, banking services, they want to be closer to the markets, and perhaps most importantly, they have sought investors that specialize in their sectors. But we have now 5 dual-listed companies in Iceland out of those 30 companies that are listed. I will show you data on 4 of them, as the 5th one just listed a couple of weeks ago, so we lack comparative data for that one. 3 of those 4 companies are listed on the main markets of large international exchanges, Nasdaq in New York, Nasdaq in Stockholm, and Euronext in Amsterdam. While the 4th one is actually triple listed. It's listed on the First North Growth Market in Iceland, on AIM in London, and the TSX Venture Market in Toronto. So why do companies that can list on prestigious international markets also want to list in Iceland? And as it turns out, the Icelandic market helps these companies a lot. It gives them access to an important local investor base, and it improves liquidity in the stocks. And starting with liquidity, you can see in the slide the share of the Icelandic market in trading of the dual-listed shares. The only stock where the Icelandic market does not account for the majority of trading is in the triple-listed stock, and there we take turns with London as the top trading venue for that stock. Now, regarding investor access, it is true that companies in certain sectors may need to go abroad to seek investors that specialize in their sector. But companies in Iceland, or with ties to Iceland, and which are therefore best known in Iceland, have the greatest visibility in the home market and the best access to general investors there, better than in the foreign markets. By general investors here, I mean in particular pension funds, mutual funds, and the public. So the dual listings give the companies the best of both worlds: the specialized investors abroad, the general investors at home. Now, there are various aspects of the Icelandic ecosystem which support local listings. There are, for instance, limitations on how much pension funds can invest in foreign currency, less than half. So they have to invest at least half of their portfolio in Iceland. Although this will be going down actually to 35% in stages in the next 12 years. Also, Icelandic institutional investors generally do not stock pick in foreign markets. So for an institutional investor in Iceland to invest in an individual company, the company in question has to be listed in Iceland as a general rule. And furthermore, a local listing is a strong preference or even a requirement of Icelandic institutional investors to participate in funding rounds. Now, companies also have a better chance of a good representation in the FTSE and MSCI indexes if they are listed locally. This is simply the benefit of being a large fish in a small pond. And lastly, I would like to mention the important support from Nasdaq CSD when it comes to shares that had to be transferable from one market to another. And this support can be crucial, and I can state with certainty that, for instance, the biotech company Alvotech would not have decided to list in Iceland in addition to its listing in Nasdaq in New York without this support. So all in all, I believe we have a very strong case for companies in sort of more specialized sectors to dual list in Iceland, and I am optimistic that we'll see more of it in the near future. But to sum up, when I look at our experience in Iceland, my main two takeaways in relation to the role of the local market are the following. First, the local market provides unique benefits to its home companies and to its home country. Benefits that no other market can provide, no matter how large or developed. And secondly, there are important externalities stemming from the local market, which means that there is an argument for various policy actions, including retail tax incentives, or like we have in Iceland, obligations on pension funds to invest in the home market. Thank you.
Go anywhere. We have questions. No time to ask all, but several are around the retail investors. If my memory serves me right, you have roughly 10% of the population investing, isn't it?
That's true.
Yeah, we too. We have, in Estonia, we have 100-something thousand retail investors. The question is that it seems that retail investor base is one key to a successful market. What do you do to educate them, to increase the financial literacy? What are the activities?
We've been very active on that front. We have held various webinars and reached out to partners to help educate the public. We have, for instance, as part of this effort of financial literacy effort, we are in cooperation, for instance, now with the two associations in Iceland, young investors and young professional women. So we hold events together and separately, and also with the banks and with the asset management companies and with our listed companies to educate the public.
Right. And one question, what was the number of issuers before the 2008 crisis?
It was close to what we have now. It were around 25, but the Icelandic market reached a high around the turn of the century in terms of the number of companies, 75, but in terms of market cap, it was not that high. There were many smaller companies. So I would say a realistic target for us is maybe 50 or 60 companies.
Right. And one last thing. I'm not sure whether all people watching this know, but we have a great development, actually. We are now, the Estonia, Latvia, and Lithuania, are part of one index, the MSCI Baltic Index. It took no more, no less than 6 years to achieve. We are still not happy about that it's still sitting in the frontier market index. Our goal is to take it further to emerging market, but at least this one big step to the right direction has been taken. You also managed to graduate to FTSE emerging. In just a few words, what have been the implications or the pros of this for the Icelandic market?
The impact has been, first and most importantly, greater inflow, mostly so far of these index funds that follow the FTSE indexes. I would also say that the foreign investors that have come into the market have introduced different ways of conducting their trades. We have seen, for instance, on the index inclusion days, a great activity in the order books, in the closing auctions that we had not seen before. So there comes like different practices with those investors. I would say healthy and developed practices. I would mention these two as the most important ones so far.
Thank you. And Magnus will be here a whole day, so if you have a question, just, look you up and ask during breaks and lunch. Thank you.
Thank you.